Are you ready to become a better investor? My name's Andrew Stotz, and I'm going to present to you the Sweden Equity FVMR Snapshot, or what I call Sweden in your hand, every week. When you sign up for this snapshot, you'll always be up to date. Why? Because every week you're going to receive this updated Sweden Equity FVMR Snapshot. You're going to know all the numbers. Why is that? Because this one page covers fundamentals, valuation, momentum, and risk, the FVMR framework that I use. You're going to be professional because you're using the same information as institutional investors and fund managers are using. And the best part, I like this one, is that you're going to do nothing. Why? Because after you sign up for this thing, you're going to receive it automatically every Monday morning as a PDF. So let's go through and see what it's about. First, we start with fundamentals. If we look at the world, we can see the world ROE is about 12.8% in 2016. That's the expectation. Sweden is slightly above it, but we're going to see in a moment that there's a real reason why it's actually not so real. Why is that? Because we've got a big problem with energy companies in Sweden. What we can see is a negative equity in 2015 and a very massive positive equity, which is coming from a distressed level. When there's a tiny amount of equity, a tiny amount of profit makes it seem like a huge ROE. Let's move on to dividend payout ratio, and we can see that the telecoms companies, like in most countries, are paying out a lot in dividends in this case. And in fact, Sweden at 62 to 63% dividend payout ratio is much higher than the rest of the world. So let's move on to valuation. And what do we see with valuation? Well, here we can see the PE of 46 times energy companies. And again, this is because of a very, very distressed level of earnings in 2015. We can see a recovery coming in 2016 for the energy companies. Material companies trading on about 12.5 times. And let's just look at the PE of Sweden and see it's about in line, slightly above the rest of the world. If we look at price to book ratio, we can see again, the energy company's price to book is very high. This is because there's a tiny, tiny bit of equity because of the restructuring that's going on there. And then materials companies have not seen such a wipeout of equity, so they're trading on about book value. What does it mean at 1.0 times book? It means that you're only valuing the assets that exist in the business now, not any future income. So that's getting cheap. Let's move on to momentum. We look at both price and earnings momentum. Let's start with earnings and see that the earnings momentum of Sweden has been low at 1.9% versus 3.5% for the world. And it's slowly picking up, but still, it's about half the rate of the rest of the world. We can see in 2015, the telecoms companies had earnings growth that was actually negative 19%. Now, what about price? Over the last year, the price of the Sweden market has fallen a lot more than the rest of the world. And we can see, in fact, the fall in energy price, the fall in energy in the market is not being matched by a fall in the energy price. Stocks. Why is that? Because the energy stocks have already fallen, and so now they're kind of leveling out. Let's look at another sector, materials, where the share price over the last week has been crushed. We can see the rest of that over the last year has been crushed, and in fact, over the last week, it's down by about 2%. So let's move on to the final component of FVMR, and that's risk. And we can see that the risk of the energy sector is very high because it's got a high amount of gearing, meaning net debt to equity is very high. There's a tiny amount of equity in this business. Now, if we look at the information technology or IT companies, well, they don't have debt. They mainly have cash, and that's why this number is negative. That's good. That's very good. Now, if we look at price, we can see what's happening. The volatility of price is what we're interested in. And of course, any one country is going to have more volatility than the world because the world just has more stocks in it. So the volatility is slightly above the rest of the world. So let's just look within the sectors and we can see the volatility in the energy sector over the last 3 months has been crushing. 52% is a very high level of volatility. And then the consumer staple companies is where the lowest volatility has been at about 18.6. 6 over the last year. So that gives a rundown of the FVMR framework and how I use it. So let's review what you get when you sign up for this. First, you're always going to be up to date. You're going to know all the numbers. You're going to be professional. And the best part is you're going to do nothing. Just sign up and you're going to get access. We'll see you in there.